Hello, everybody. Welcome. Happy Sunday. Josh Greason here from Forex Bootcamp. For those of you that don't know, we're doing brief daily videos for 30 days on my Forex trading life. How does trading fit into my real life? You know, with my wife and kids, my full-time job, all the other commitments and things we have. We're all busy. How does trading fit into it? Why do we get into trading in the first place? What is the Forex? What's the long-term goal? How much money can you make? How much time does it take? What do you actually do? What tools and strategies, and how did you learn? And all those sorts of things we're covering in these 30 brief daily videos. They're not intended to be, obviously full trainings on the tools and strategies and things like that, but just kind of some brief exposure so you have a general idea of what we're doing and how it works. So today is day 10 of 30, and the topic is indicators. So what are indicators? We covered charts the other day, right? So we covered the candlesticks going up and down and things like that. Green candles going up, red candle going down. Green candles going up, red down, and so on. But indicators give you additional information about what's going on the chart. So first, I just wanted to show you a naked chart. This is, just a basic chart. All is on there is the candlesticks. Red down, green up, red down, and so on. Red going down means people are selling. Green going up means people are buying. So that's the gist of a naked chart. And now we can add something on here called a moving average. So this is just a naked chart here, but I've added a moving average. And I don't know if you can see it on your screen or not. It's kind of a thin red line passing right through the middle of all this stuff. You see that? So a moving average basically averages the average price of the last however many of these candlesticks that you set it for. You can set it to average out 200 candles, 50 candles, 10 candles. Obviously, a 200 candle, 200 moving average is going to be way slow moving and just kind of mellow. Whereas a 10 or a 5, it just averages the last 5 or 10 candles. It's going to be quicker, more sharp in its movements, and closer in its response to what price is actually doing. So you can have both on there and kind of get, okay, if you see the moving average going up, we're on a big uptrend, but in the middle of that uptrend, you'll see the little moving average going like this while it's following the bigger moving average. So you can see how they work together. And then we have another indicator that averages the difference between those two called MACD. I'll show you what that looks like in just a minute. But moving average is a good indicator of what's price generally doing. So if you're not concerned about riding, all the little humps, you're not scalping, you're just kind of like, I'm gonna take the trend. You can see this red line was coming down, and now here it's shifted, it's going up. Now obviously price actually shifted down here. So if you're just watching candles and learning to read candles and some other indicators, maybe you could have potentially jumped in a buy here and got up here. But if you're just a little more conservative trader, you just want to follow the moving average, you see it came down here and shifted. Oh, it's going up. So right here would have been another good time to get into a buy. You still could have got all of this. And over here you see the moving average start to shift down. But you would have rode all the way up to there, and you could have checked out up there and you still make some money. So moving average is useful. Let me see what I got here. I got Bollinger Bands here. Okay, I love Bollinger Bands. I do use this on a couple of the strategies that I use. Now the way I like to think of Bollinger Bands is like this, okay? It looks like a road, right? You have an outer edge of the road, you have another outer edge of the road, and you have the center line going down the middle of the road. So the price, the candlesticks, is like a driver. And as you can see, he's a little bit erratic in his driving. Maybe he's getting a little sleepy, maybe he had some kind of substance he shouldn't have had before he was driving, but he's kind of all over the road. But what's important is that he's driving here and, he's running off the edge of the road over that painted line on the side. He whips his steering wheel back to the right, gets back on the road. Okay, he's coming all the way across the road. Oh, I'm on that edge. Oh, he whipped it left and got back on the road. So these kind of act like guidelines or limits as far as where price should probably not extend too far beyond given our current general state of movement. So if your price is bumping into these lines here, it's probably a time to start watching for a potential sell. So as you can see, he got a little bit too far out the lines. Now you're in a sell. All the way down here, we got outside the lines. Ooh, you might want to think about getting into a buy. Yep, got into a buy. You could have checked out here, made some money, and so on. So here, you got outside the lines again. You see kind of, okay, I got it together. A little straight down the middle of the road. Oh, I'm off the side of the road again. Probably time to start looking at a buy, and look at this nice buy trend that we had. And then he got off the side of the road, off the side of the road. Oh, he's curving it back in. Check out of that buy trade, enter a sell. You know, you can just write it like that. So you notice these wave type movements of price on large scale, small scale, every scale. It does that. And here's the way I like to think of it. People are buying, okay? You know, people were selling over here. And then all of a sudden, people started buying down here. A couple people started buying, a couple more people started buying, and then all the other traders started going, hey, wait a minute, everybody's starting to buy. We better start buying. And so everybody starts buying, and price goes up, 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 and then it gets to a certain point where everybody says, hey, wait a minute, there's too many of us here buying this. We can't go on like this forever. Somebody takes the lead, and they start selling. So they start selling, and then a couple more people, hey, people are starting to sell. We better sell. And price goes down. You think of it like a teeter-totter. Everybody runs from one side. They're all selling. Oh, we all got on one end. And then a few people start running over to this side. And, oh, now they're starting to buy. And it tips. And then everybody gets down at that end and starts buying. And then they go, wait a minute, too many of us have bought. We better start selling. And that's just a teeter-totter, rocking back and forth like that on large scale, on small scale. On every scale on here, we're on a 15-minute chart now. You'll see the same thing on a 4-hour chart. Oh, too many people bought. Oh, too many people sold. Oh, too many people bought. Wait, we're starting another sell trend over here. So Bollinger Bands. That was Bollinger Bands and a little bonus on the teeter-totter. Okay, what was I going to show you here? Next, I have a bunch of indicators on one chart. Actually, let's just show you this strange white chart, just to show you that you don't have to have black charts like me. I like the black charts. It's just crisp and clean. You can have your chart white. You can get rid of that grid. You can only have one indicator. You can set it up however you like to look at your charts. I don't like the white charts. They just hurt my eyes, especially on my phone in my house and things. I like the black. So this one's got a bunch of indicators on it, way more than I would ever personally want to see at one time. But you can see on the top here, you have the actual candlesticks with the Bollinger Bands. Okay, keep that guy on the road. That's all I need to know. Oh, get back on. Now, RSI and stochastics are very similar. They measure, remember we talked about that teeter-totter, how many people are buying, how many people are selling. This measures that for you. Tells you, okay, you see this number on this section from this white line to this white line. That yellow line in there is the RSI, the relative strength index. How strong is the buying crowd versus the selling crowd, relatively speaking. So as you can see, I have a line here at 30 and a line here at 70. Those are the generally accepted numbers where when a bunch of buyers get here and this line hits 70, too many people have bought. It's called overbought. And so people are probably going to start selling. So as you can see, it did just that. They got down here past the purple indicator, the 30 line for selling. Oh, it's oversold. So people start buying. It goes up. Okay, they managed to keep it together. Oh, too many people sold. Got back in the middle of the road again. Too many people sold. Oh, too many people bought. Oh, too many people sold. Too many people sold. Too many people bought. And so on. So, and then the stochastics works very similar, except it actually separates the buyers from the sellers. So the red line is the sellers and the blue line are the buyers. So you can see here, it gets up to this peak, right? So many people are buying, a few people are kind of following along, selling, but there's not a lot of strength there. The blue line is on top, so that means more people are buying. So, but up here, it gets to that peak, right? Well, it gets kind of near the 70 on the RSI, not exactly, but the red line suddenly crosses over, and now the red line is on top of the blue line. That means more people are now selling. So price is going to start shifting. Right? Over here, you see the red line crosses over. The red line is on top. More people are selling. We get that downtrend. The blue line crossed over. Now we get the buy trend. And you can see the candles are reflecting that. Down here, okay, too many people sold. The red line was on top. Now the blue line is on top. People start buying again. Price starts going up. Price starts going up. And you're going to see the red line cross over and people start selling. Just like that. MACD is an average of moving average, the difference between a couple of moving averages, essentially. We talked about moving average earlier, that little red line going through the middle of all the candles. That's the average of X amount of candles. I said you could do a big average and a small average, and one would be kind of mellow, one would be more responsive to price. And there's always a difference between those two lines. The MACD basically averages the difference and draws it on here as a line and also as these little blue humps. So there's just many indicators you can use. The last indicator I'll tell you about real quick, because it's one that I actually use. This is how I like to see my chart. I like to see a plain chart. Sometimes I'll drop the RSI on there, the relative strength index, because that's very helpful. If you go up here and think, okay, and then you also see your RSI says it's across the 70 line. Too many people have bought this. It's probably going to sell. It's just nice to have an extra indicator. But hopefully you have your chart, you know, you learn to mark it up and all that stuff. But the other one I like to use, okay? Let's say you have a big move. Let me get on a bigger scale here. Or, yeah, H1 is a nice scale. Let's see a good example. Look for a nice impulse. Okay, here we go. Here's a nice impulse move. So the Fibonacci. What is Fibonacci? The Fibonacci, huh? It's like a mathematical magic that happens throughout the universe. And you'll see it in nature. You'll see it in art. You'll see it's like the golden ratio. You'll see it on nautilus shells and all kinds of weird things that people do. And you know, how do we explain, how does the Fibonacci find its way into the charts? I don't know. It finds its way into everything. And probably because people are actually what moves this price. And so somehow, maybe subconsciously, we're guided by this mathematical principle. Who knows? But anyways, what does it look like? We drop a Fibonacci on here. We have this big up move, right? And we see price finally starts to go down. Then we drop this on here. And it has these key levels. And without getting into too much detail, all we need to know is that, okay, if we think price is going to still go up, how far is it going to go down on that teeter-totter before it starts going up again? We need to watch it at that yellow line. We need to watch it again at this yellow line. As you can see, in this case, we got around this yellow line, started turning around. Sometimes it's bang onto the line exactly. But if it didn't go there, we'd keep watching it to here, and then to here, and then if it gets past there, we got to figure, okay, forget it. So that's Fibonacci. That's another indicator. And this is how I like my chart. I like to just mark up charts, trend lines, what's the price doing, previous highs, previous lows, support, resistance, supply and demand, all that sort of thing. I don't expect you to learn all these indicators and what they mean, but the reason I wanted to cover them today is because in the next, 20 videos we have left, I hope to touch on a couple of the tools and strategies that we actually use. And some of them involve looking at the RSI, for instance. Okay, if you're going to get in this trade, make sure the RSI hits 70 before you enter sell. Make sure it's at least at 30 before you enter buy. Or make sure it hits the Bollinger Bands before you enter sell. Make sure it hits the Bollinger Bands down here before you enter buy. So you look for that kind of stuff. You don't have to be a financial genius. All of this doesn't have to make tons of sense to you. But if you can say, does price touch that line? Yes. Okay, it's probably a good sign I should get into a trade. If you can figure basic stuff like that, then the strategies make sense. But I just thought I'd show you the indicators in advance of those videos that will be coming. Hope it was helpful. Hope you have a great weekend, and hope you can join me for the rest of this journey. If you liked the video, please hit the like button. If you love it, hit the love button. If you want to share it on your page, share it. I could use the love, and let me know that you're out there and appreciate these videos in some way, okay? Have a great weekend. We'll see you on the videos to come. Bye-bye now.